So again, Justin, thank you so much. My name is Michael Oxborrow. I will be presenting today's webinar. So back over to you, Justin, just to remind everyone about the questions that they can submit.
Of course, please make sure to use the questions box, not the chat, and we will have all of the questions answered towards the end of the session. So we're going to start off our webinar with a question coming from one of our audience members. Michael, what do we need to do to prepare for our 2022 audit?
It's a great question, Justin, and I can just say now that whoever asked this question has come to the right place. So today we will be covering a variety of things, including primarily our 4-part audit process.
So this is what we're covering today. Our 4-part auditing process, as Michael briefly mentioned: obtain, review, reconcile, and ensure. The common nonprofit auditing mistakes that you need to avoid. So not just what you should do, but what you should not do. Your audit is complete. What comes next? And towards the end, we are going to be answering all of your nonprofit auditing questions. So with that in mind, I now give you Michael Oxborrow.
Thank you, Justin. So yeah, my name is Michael Oxborrow. I'm a senior accounting manager here at MBS. I'm in the process right now of building out our nonprofit department. So hopefully throughout the course of this webinar, you'll get to learn a little bit more about me, a little bit more about MBS, the services that we can provide, and again, with a particular focus on our nonprofit clients. How can we make your organization audit ready? So we provide a variety of accounting services: day-to-day transactional recording, record keeping, reconciliations, things like that. Additionally, we can offer CFO and controller level services. This might include things such as cash flow projections, budgets, forecasts, grant reporting, things like that, attendance at your board meetings as well, to give that little bit more in-depth knowledge into the numbers. And we also offer accounting support software, things like managing your accounting software, some certain apps that we might be able to integrate into your accounting software, all with a view of streamlining and making life a lot more efficient. Here at MBS ATA, we have what's known as the value-based method when it comes to our clients. So the old school way of hourly billing our clients is now gone. What we like to do is offer a fixed fee, all access engagement agreement. You get unlimited access and quick responses from your dedicated team. We use our expertise and insights, having worked with a lot of other nonprofits, to really tailor and suit your best needs. As mentioned, our fees are fixed, and we have a variety of payment options, including discounted rates for dedicating yourself to a longer term contract. And we've calculated that using MBS services and our dedicated team, you can save between 20 and 35% rather than hiring an in-house full-time bookkeeper, controller, or CFO. So hopefully today gives you some insight into the knowledge and the expertise that we have here at MBS. Now, Justin, before when people were asked to sign up for this webinar, I believe we asked them about where they're at in their current audit for 2022, and we have some results.
Now we do, Michael. Let's check it out. So where are you in the audit process? As you can see, an overwhelming majority of 57% say we're new, we don't need an audit yet. And then coming in second, it's 38%, just getting started for 2022. And then over there at the slim blue, completed the process for 2022. However, that does not mean that there is one stage more important than the other. So Michael, we have our second question of the day. What methods should we use for our auditing?
Thank you, Justin. Yeah, it's a great question. And again, we briefly touched on the 4-part preparation process, which I truly believe really helps all the clients that I've worked with and will definitely benefit your organization. And those 4 parts are obtain, review, reconcile, and ensure. Now, I'm going to touch on on those a little bit more now before diving into a bit more detail. So the first step is obtain. This will be kind of key documentation, financial statements, grant letters, things like that, and also your auditor request list. Review, that'll be things like the underlying data, kind of like a high-level review of the numbers. Your internal controls, that's your day-to-day processes, who's responsible for certain things. And also reviewing the request to make sure that you fully understand what the auditor is looking for. The third step is to reconcile. That's anything from your basics, such as your bank accounts, through to big ticket items on your statement of activities, which is the non-profit, profit and loss. And then the final step is to ensure, this will make sure that everything that you've done in steps 1 to 3 is 100% accurate. You're satisfied that you are ready to go into the audit and that your audit package that you're going to give to your auditors is complete. So now I'm going to dive a little bit deeper into each of these and kind of explain a little bit more about how you can make your nonprofit audit ready. So step 1, as I mentioned, was obtain. Now, the first step that I would do is to obtain your financial statements. Okay, this is getting your organization's financial statements from your accounting software, and just to have those ready. That should be a fairly basic thing to do, and it might sound very obvious, but just get these ready, and then we'll dive a little deeper into that later on. Key financial documentation. Now, this is going to be related to all qualitatively and quantitatively significant transactions occurring in the year. Now, the auditors will naturally lean more towards looking at the bigger ticket items there. So anything qualitatively, be that you've signed a new lease in the year, you've hired X number of new employees, all of that documentation should be ready and available to hand. And there might also be, you might have entered into some significant financial transactions. That might be, you've got a new grant during the year, a significant grant for your organization. Just make sure that you have all of that documentation to hand, as the auditors will certainly be looking to review that. Policies and compliance. Now, we should be getting copies of all of our internal policies, all of our employee handbooks, things like that. It's important to reiterate here that audits aren't just about the numbers. The numbers play a big part in it, but the auditors will be looking out for how does your organization operate? And again, we'll touch on that a little bit more later on. And expert assistance. Sometimes it can be very beneficial to organizations to ask for that little helping hand, particularly in items of such significance, such as the annual audit, because engaging specialists to help with the process can really improve your efficiencies and actually allow you to dedicate more time to your passion projects rather than administrative burden. Now, there are some common errors that I've seen throughout my life. I've got over 10 years experience in accounting. I was an auditor for most of that. And only in recent times have I come to realize that nonprofits occasionally need that little bit more of a helping hand because, again, you're dedicated towards your mission and your passion projects, and sometimes the administrative burden can be a little much. So a couple of things I would look out for. The first one is just to wait for the auditors. If you have an annual audit, do not wait for your audit firm to reach out to schedule the audit and then use that kind of as a trigger point to take some action. We should always be looking to make sure that our numbers and our documentation and our record keeping is sound and up to date throughout the year. Let's not just focus this time at the end of the year when the auditors have said that it's time for the audit. And additionally, waiting for requests. Again, the audit firm will likely send you a request list of all the information that they need, including specific transactions that they're going to test. By test, that basically means the auditors are making sure that you've recorded these transactions accurately in the correct period, et cetera, et cetera. But we know, running these non-profit organizations, what is significant to us. Again, auditors will take a sample of transactions which might not be significant, but more often than not, everything significant they will be looking at. So use your knowledge of your organization to know if this happened or this happened during the year. I know that's big for us. Let's make sure that we have all the key documentation there and ready before the auditors ask for it. Step number 2 in our process is to review. Now, the first thing that I would do, and I'm actually going to bring the 2 points together here, is a high-level analysis, including comparing to prior years. So in step 1, we obtained our financial statements from our accounting software. And again, using our intuition, using our knowledge of our operations, take a look at those numbers. Are they aligned to your expectation? Let's say arbitrarily, you held a gala this year, and because of, I don't know, maybe the pandemic or whatever, that last year, the gala wasn't as successful as this year. So if you look at your financials in your accounting software and it's actually telling you that this year's gala was worse than last year's, then you know from your intuition that doesn't make sense. Something's not right here, and it needs a little bit of investigation. Again, comparing to prior years will allow you to determine if any significant fluctuations make sense. So comparing to the previous year, you might see a significant increase in payroll expenses. But actually that might make sense because you've brought in 5 new employees this year because of a new grant that you received or a new project that you're developing. Now, again, it's important to note here that auditors will always ask for significant fluctuations and able to quantify that. That's going to be their step one in their risk assessment. So by looking at this data, financial data year to year, you're kind of getting ahead of the game there. Again, review your key financial documentation. So again, we said in step one, let's obtain all that documentation that you know of the significant things that have happened during the year. But then if we need to review that documentation to make sure that we've recorded things accurately. Let's say, for example, that somebody pledged to you $100,000 in the year, and they're going to give that to you in two $50,000 checks. Well, it's important to note here that you can record that $100,000 there and then. We don't have to wait for the cash to come in to record it. So you might have only recorded the one check that you received. So again, by just comparing this key financial documentation to what you have in your financial data will be a huge step in making sure that your data is fundamentally accurate. And prior auditor correspondence. So again, I know some of you are new to this and maybe haven't gone through an audit before, but every single year your auditor will give you what's known as a management letter, as well as any adjustments that they've had to post into your books and records. And I would suggest that this is very, very key here, because reviewing this correspondence allows you to know not only what the auditors might have found in the previous year, but also any adjustments that they posted. And if they had to make adjustments, an adjustment, for those who may not be aware, is where the auditors reviewed your financial information and determined that something was incorrect and they've had to adjust for it. By reviewing that, you get some insight into where the auditors found these potential errors or potential areas for improvement, and you can kind of get ahead of that this year, maybe scrutinize that data a little bit more, because ultimately the end game is to have no auditor findings and no adjustments. And again, the audit management letter won't necessarily just include numbers. It might include recommendations for your processes. For example, again, a very silly, arbitrary example, the auditors might ask you about your cash, and you might have a petty cash box full of bills used for events and programs, whatever. And if the auditor finds out that that's kept unlocked in the staff communal area, they're going to make a recommendation there. Let's lock that. Let's put it in the finance room with limited access. So audit management letters will always include very good recommendations for your organization on how you can make things more efficient and safeguard your assets. A couple of top tips that I have for you. Don't sweat the small stuff. So again, I mentioned comparing financial data year on year and looking for these fluctuations. I'm talking about significant fluctuations, okay? I don't want you to be dedicating time to see why your office expenses has gone up by $100 on the prior year. Auditors won't be too concerned about that, okay? So in auditing, there's something called materiality. And what that broadly means is if your financial statements were incorrect by X amount, that would influence your opinion and your understanding of those financial statements, okay? Now, again, auditors will never tell you what that number is, because obviously that's inside information for them. That's the reason that they're auditing. But equally, it's important to you to determine what the auditors will be looking for in terms of significant numbers. So I would suggest, you know what's big to your organization. Let's not sweat over small increases, but if your accounts receivable or your grants receivable has increased by $100,000, let's look into why. And board reporting packages. So again, what we're doing through the audit process is we're looking at a year's worth of financial transactions, a year's worth of data, okay? And when we come to the audit process, of course, we're going to be looking over that full year of data. But I would recommend implementing, if you've not already done, maybe a quarterly or a semi-annual formalized board report package for internal use. What that allows you to do is it allows you to break up your deep diving in your financial data into, if you're doing it quarterly, 4 times a year, which makes things so much more palatable when it comes to getting to the year-end process. If you've already looked through your financial data in stages throughout the year, it's so much easier than going through one whole year's worth of data than it is if you do it throughout the year. Because bear in mind, an auditor might recommend or propose an adjustment to your numbers, okay? And even if you have like brief board packages now where you just run the financials and send it to the board, or you run the financials and they're the results without any investigation, an auditor adjustment as part of the annual audit might have been related to the first week of January if you're in a calendar year, which means that all of that information that you provided throughout the year was incorrect from the first week. So I do recommend a thorough board report package, full review process throughout the year to make the year-end audit a lot easier. Okay, so stage 3 is to reconcile. Arguably the most, I mean, they're all important points, but this is arguably the most important point. This is where we're going to be really digging into the data to make sure that we're satisfied that these numbers are completely accurate. So the first step would be to reconcile the basics. Now, what do I mean by the basics? I would like to think that everybody on this call is reconciling their bank account on a monthly basis, reconciling their credit cards, reconciling their investments if they have those. And I call these the basics because every month you will receive a statement from your financial institution telling you your balance in your bank account, on your credit card, in your investment account. And we can basically just compare what they're telling us to what's in our software. Okay, really basic stuff. That being said, when it comes to bank accounts, things can get a little bit more tricky, particularly if you issue a lot of paper checks to your vendors. Obviously, when we record a check in our accounting software, that's money coming out of our bank account, but your vendor might not have cashed that until later down the line. So it's really important that you scrutinize your bank reconciliations to see if you have any uncleared transactions, maybe significantly uncleared transactions for a long period of time, and understand why that's the case. Have they already cashed it? Did he maybe issue a duplicate check? Did it go to the wrong vendor? Did they receive it? Did they receive it at all? It's important that we kind of scrutinize your bank reconciliations, but making sure that these basics are in place to start with. Reconcile your receivables. So receivables, we should all be on top of our receivables. Receivables is money that is owed to us, be that through people making promises to pledge money to us, be that through the sale of goods, maybe through rental income, all of this. Let's make sure that we're scrutinizing this, reconciling it to make sure it agrees to what we know. So when you're recording your receivables, you should always put in what's known as a due date in your accounting software. That's basically what date are we expecting this money to come in, be that through what the person who pledged the money said they would pledge, or maybe through a contractual agreement that they have to pay by a certain time. Now, by recording this due date, it allows us to run reports in our accounting software, which tells us when this money is overdue. And we can scrutinize our receivables aging reports, that is, how overdue is this debt, to determine if we need to take some action here. So there might be something that's ultimately uncollectible. Somebody, for example, might have pledged you $50,000 in 2 $25,000 checks. We'll record the $50,000 that we're due. We receive the first check, that offsets it. But then what if they can't pay? They write you a letter and say, hey, I'm really sorry, still feeling the effects of the pandemic, X, Y, and Z has happened, I can't give you that extra $25,000. Well, that might be, that's a reason to write that off. So again, scrutinizing our data here would really help us to determine that everything that was pledged to us is accurate and current, and anything that's old and not been collected yet, we can understand why. And also it's important to note here that you might have a development or a fundraising committee, people who go out and they send emails and they collate the data. Yes, we'll pledge $10,000. Yes, we'll attend, et cetera, et cetera. It's important that if you do have that facility in place, and I do recommend doing it as well, that maybe they can provide you with a list of pledges and donations and money that they expect to receive, and you can cross-check that to your books and records. Reconcile your payables. Again, very, very simple to do. Take a little look, compare year to year. What do we owe to who? Why do we owe it? All that sort of thing. Are there any recurring bills or vendors which we need to record? Maybe it's a timing matter. Just review it year on year just to make sure that what we owe makes sense and is aligned to your understanding. And big ticket income and expenses. Now, reconciliation is a lot simpler to do from a balance sheet or a statement of financial position perspective, because that's kind of a snapshot of where we're at. And we can look at things like bank statements, and we can look at things like our receivables listing and all of that. So when it comes to income and expenses, things can be a little bit more difficult to reconcile. But that being said, consider again, think big picture. What are our big numbers here? Now, payroll and personnel expenses could be a big ticket item. But again, there are some certain reports that you can run from your payroll provider, which can give you a good year-to-date number. You can compare that to what's in your books and records, and that will get you way ahead of the game, because the auditor will definitely be asking you about your payroll reports. And things like grant agreements as well. You can compare, as I said in step one, we can obtain all of these grant agreements that we've got. Maybe you can speak to your development and fundraising committee, and you can compare these grant agreements in aggregate to what's in your books and records. Because again, think big picture. You know your organization, you know what's significant. Make sure that we can quantify it to a certain extent, because I can tell you now, the auditors will be looking. A couple of top tips for you when it comes to the reconciliation process. First one is opening net assets. The single most important thing that you can do when you're reconciling your books and records is to make sure that your opening net assets number in your financial software agrees to the closing net assets number in your prior year audit report and your financial statements. That is fundamental. If they do not agree, something has happened and we need to investigate there. Okay. I would suggest to you, even on day one of a new fiscal year, make sure that that number agrees to what's in for the previous year or your previous audit report. It's fundamental. I recommend always, once you get an audit report, make sure the books and records in your financial software reconcile to that audit report, and then you close the books, which again, I'll touch on a little bit later on. And again, also break it down. I mentioned it previously, but I work with a lot of my clients, and I create what's known as a statement of financial position reconciliation workbook. And that's literally where you run the statement of financial position or non-profit balance sheet, and you deep dive into every single one of those numbers to make sure that you can quantify it and then it makes sense. And again, doing that on a monthly basis makes it so much easier to do. You can identify errors and quicker, and you're not relying on having to review a full year of financial data as part of the audit process. So that's something that I do, something that our team does fantastically well. So we can certainly help if that is of interest and intrigue to you. Now, the final step of our 4-part audit process is to ensure. What do I mean by this? Well, basically, pretty straightforwardly, self-review. So you've obtained, you've reviewed, and you've reconciled. Let's now make sure that the first 3 steps that we took there was correct, okay? All our information must be accurate. We must have everything completed, and we must be satisfied that what we pass over to the auditors is 100% bulletproof, foolproof. This is correct financial information, and I'll touch on the importance of that later on. And restrictions. So it's important to note here, and one fundamental thing, and I'll touch on this a little bit more in a later slide. If you receive a grant or a donation or a pledge which has a restriction on it, we must make sure these are appropriately recorded as having said restrictions, as with donor restrictions. We must record that in your accounting software. And again, I'll touch on that a little bit later on. Compliance. Let's ensure that we are in compliance with our various grants and agreements. Maybe you have a grant from federal government. There's a lot of grant reporting and a lot of compliance matters there. Even just receiving money from a philanthropic trust, for example, if they donate to you and they ask for progress reports, let's make sure that we're giving them what they requested. Okay, we must make sure that we're in compliance with every single grant agreement and various other situations throughout the year. And again, restrictions. We must make sure that they are recorded as with restrictions, which I'll touch on now. So many nonprofits struggle with the concept of and accounting for donor restrictions. So I'm hopefully going to give you a bit more insight here if this is something which I think you could benefit from. So what are they? So any gift, contribution, grant, etc., that you receive which specifies a specific way or time in which these funds must be spent. Okay? So the income must be recorded as such in the statement of activities as having restrictions before being released from restriction once we've satisfied those restrictions. This is essential to compliance. So I'm going to break it down into a basic example, which hopefully gives you some insight. Okay? Let's say you got a check for $50,000 and it says, and your organization is building a new school, and you're still fundraising for other donations just to build up a pool of funds, but this check comes through the door and it says, you must spend this, here's $50,000, you must spend this on building the new school. Okay? We have to record that as having a restriction because clearly this isn't $50,000 for us to use as we like. The donor has said to us, you must use it to build the new school. It's therefore imperative that we track this accordingly. We have methods in place where we're tracking spending on the new school and that we can clearly allocate this $50,000 towards that spending. And then once we spend that $50,000 on the new school, we can then release it from restriction. Okay,
so look at that provided from our audience. So Michael, what are some of the things to look out for?
Well, it is a great question, and thank you to whoever submitted this before the webinar. There's lots of things to look out for. We could have a 3-hour webinar of things, of do's and do nots in the auditing world, but I'm going to share with you now some real-life examples that I've seen during my time in public accounting and auditing, and what I think are common mistakes to avoid. Restrictions recording. Okay, so as I touched on previously, if you don't have any system in place for recording and tracking restricted net assets, the auditors will not be happy. We must make sure that we have robust systems and controls in place for recording restricted net assets and their associated releases from restriction. Again, here at MBS, we have dedicated workbooks. Our team are very knowledgeable in all of this. So if this is something which you think could benefit your organization, please feel free to reach out. But it is fundamental for nonprofits that we have restrictions recording in place. We need to avoid reliance on cash accounting. Now, your audited financial statements will be in compliance with US GAAP, that is United States Generally Accepted Accounting Principles, which requires accrual basis accounting. And what that broadly means is you record income and expenses when they are earned rather than when they are paid. So when it comes to the year end, that's going to be a fundamental matter to adjust for, which again, the auditors will be on the lookout for, because again, a lot of nonprofits, they might not be able to dedicate as much time to their accounting and bookkeeping process as they would like, and therefore maybe they just record cash as it comes in and cash as it goes out. We need to consider accrual basis accounting. And again, as I put there, this again, promises to give. I've used a couple of examples previously where somebody writes you a letter saying, I'd like to donate $50,000. I'm going to give you 2 checks for $25,000 over the next 6 months each. You can record that $50,000 there and then. That's a promise to give, okay? Just because we haven't had the money yet doesn't mean that we can't record that income. Another one, your CPA and your auditors, they aren't just for audits, okay? I would thoroughly recommend communicating with your CPA and your audit firm outside of the audit process, okay? A lot of clients that I've worked on, the only time I would hear with them throughout the year would be when it came to the audit, okay? Your audit firm, yes, they're independent, and yes, they can't be seen to be helping you with your numbers, but they can give you valuable insight into changing accounting regulations, maybe new compliance requirements. I know a lot of CPAs, I know a lot of audit firms, they have newsletters, e-newsletters that you can sign up to that give you insight into new accounting regulations and things like that. I would thoroughly recommend doing that because your CPA and your auditors, they aren't just for audits. And not asking for help. If you need assistance, seek assistance. I can speak from experience here, okay? I've had so many clients where they come to the audit year end and they say, oh yeah, Mike, you recommended to us that we do this during the year. I wasn't quite sure how to do it, but I've had a go at it, okay? I can attest to you now, messy and incorrect books are an accountant's and an auditor's worst nightmare. It will lead you to more time and more cost. If you aren't sure about how to do something, or you know something needs changing but you aren't sure, engage people who do know. And trust me, that will save you time, money, and all sorts down the line when it comes to the audit process. Just a couple more. Thinking that when you get your audit report, thinking that that's the end of the process. It's absolutely not. Once you get to your audit report and your management letter from your audit firm, don't think, yes, that's done, another year without the auditors. Excellent news. There's valuable information in those reports, including areas such as internal controls and process recommendations. All of these recommendations are designed to benefit your organization, to make you more efficient, which in turn will save you money. And again, the adjusting journal entries. If the auditor finds numbers that need to be changed, they will recommend this audit entry for you, and you have to make sure that that entry ends up in your software so you can reconcile your accounting software to your audit report. And again, that links back to one of the key points I mentioned, which was opening net assets. Okay, so Justin, I hope that gave you some insight into some common mistakes that I would think to avoid. I would expect you to be avoiding in the audit process. But I understand there was one more question that was asked before the webinar started.
There was. That was a great point that you brought this up, that it's not just what you do, it's what you don't do that's also quite crucial to the auditing process. So the next question is, we just completed our audit. What's next?
So we've covered a lot on preparing for the audit and best practices and what to avoid. And I appreciate that only a small number of attendees today have said they completed their 2022 audit already. Kudos to you, that's very impressive. It's very important to cover the next steps once your audit is complete. As I mentioned previously, we can't think that we got our audit report, we got our management letter, we can't think that that's the end. There's plenty more that we can do. So the first one will be to hold a closing meeting, okay? To ensure that you speak with your audit firm, speak with your auditors to understand everything. How did they find it? Ask questions of them. How long did it take you, longer or less time than you anticipated? That'll give you some insight into their fees, also give you some insight into how well prepared that you were. Discuss the financial statements. Make sure that you understand your financial statements. They're your organization's numbers. You need to be sure and satisfied that you fully understand them. And again, the auditors can make recommendations to you in person as well as simply in writing. Make it a lot more personable, and you can kind of get a feeling as to why they've recommended things. I thoroughly recommend arranging a closing meeting. Touched on this previously as well. Adjust and close the books. Any adjustments that your audit company makes, we need to make sure that they end up in your accounting software. The auditors will not do that for you. They can't. They are independent. We put these adjustments into our books and then make sure that when we run reports in our accounting software, the numbers match the audit report, okay? Once they do, we can close the books, we can lock the books to make sure that no previous financial data can be adjusted, because obviously that was audited and we know that that was the position that it needed to be in. What changed? Again, if you're given adjusting journal entries, which again is changing the numbers from what you told the auditors, why did this happen? Can we get to the bottom of why it happened? Let's understand why the adjustment was made. Is it an accounting regulation change? Is it something that maybe you weren't aware of? No one's expecting you to be experts in accounting, okay? But you can get some insight as to why it was adjusted, and maybe you can get yourself prepared for the future. Your management letter. Again, audit companies aren't just focused on the numbers. They'll look at your processes. They look at who's approving payroll, who's preparing payroll, who's cutting checks for you, who's depositing money at the bank. All of this thing, they're going to look at the day-to-day processes, okay? And they are going to make some recommendations for you for your internal controls if they think things can be improved. All these improvements, again, are designed to make your organization more efficient and safeguard your assets. And these can be invaluable for your efficiencies, because if you can save time, you can save money. And again, bring in the experts. Genuinely, if you have an audit report, maybe things didn't quite go to plan, there's a few adjustments, there's quite a few recommendations internally. I understand that the accounting process for nonprofits can be really cumbersome, can be really technical, can be really challenging. And there's absolutely no shame at all in bringing in people whose jobs it is to make sure that your books and records are 100% accurate. given it over to your audit team, and you can rest assured knowing that the whole process is taken care of, and you can dedicate your time to all of your fantastic projects that you have at your non-profits. Okay, and because there's no time to rest. As I touched on before, the audit report is not the end. We should always be thinking about our numbers, thinking about our processes, okay? Because the ultimate goal of an audit is to have no findings and no adjustments. And a clean audit is a cheaper audit because it means that your audit company didn't have to spend as much time. They weren't worrying about things. So the better prepared that you are, the cheaper your audit fees can become. So, Justin, I'm hoping that gives you a lot of insight into MBS, what we do, areas to avoid, ways that you can get prepared. I'm going to pass it back over to you because I think we might have some additional questions.
That we do, and thank you so much, Michael. And again, we at MBS want to save you time, resources, money. We want your nonprofit organizations to go out there and have all of your time and energy focused on changing the world. And we truly do appreciate everything that you do in order to make this planet a better place to live. So thank you for that. We are going to give you a couple of seconds, maybe a couple of minutes, we'll see how we feel, to submit your questions using the questions window. So if you have any questions on anything that has been presented, please put it in the questions box now, and we will begin to answer them shortly.
Fantastic. And I actually think that we've had one question come in, which is, how do I make sure undeposited funds in QuickBooks is correct? Now, that's a fantastic question. So for those unfamiliar, undeposited funds is a QuickBooks automatically created account, whereby you basically tell QuickBooks that you've received a check or some cash as a payment. Okay. Now, undeposited funds isn't something that you can necessarily reconcile, but you can automatically review the balance to make sure that what's in there kind of makes sense. It's not like a bank account in QuickBooks, annoyingly, where you don't have a statement that you can reconcile it to, but you can always dig into that number just to see what's in there. Okay. So again, the concept of it would be that you've received a check, you've received some cash, and the term undeposited funds is because that money ultimately needs to come into your bank account. Okay. Now, if you go into QuickBooks and you click on bank deposit, okay, what should happen is that anything that's in undeposited funds should be there listed to allow you to select it. And so let's say you had two checks and you went to the bank and you cashed those two checks together. You go to make a bank deposit. When you go to the bank deposit in QuickBooks, it should list every single thing there, which is undeposited. You select that and it goes in. And it matches to your bank deposit when your bank transactions come through. So I would recommend just looking what's in the detail behind that number, just to make sure that all the checks and things are current there. And if you want a quick way to do that, you can just click in QuickBooks. You can go to New Bank Deposit, and anything that's listed there would be what's in undeposited funds there. And you can review that to make sure that you know that's correct and you know that it's current.
Great. Michael, it seems like we have some questions that were submitted prior to the webinar here that we also can answer by our attendees. First question, what time in the year should I begin to prepare my audit?
It's a fantastic question. I would suggest all year round. Do not consider the annual audit to simply be something that's done once a year. We can get ourselves ahead of the game so quickly, so easily, by reviewing all of our financial data and following this 4-part process throughout the year. Now, obviously, I'm presenting this to you as an audit preparation process in these 4 parts, but theoretically, this could be done on a monthly basis, on a quarterly basis. Now, I appreciate, there might be time burdens, administrative burdens, that you simply cannot meet these to doing this once a month, but you can get prepared for your audit throughout the year. When it comes to actually scheduling the audit, obviously, I would recommend here that isn't just going to be a one-time thing. I would liaise with your audit firm at a time that's convenient to you. So you know when your fiscal year end is, and you might think, okay, so we have a fiscal year end of June 30th. We've got an event in July. People are going to be on vacation in August. Let's arrange it for October, that sort of thing. So you can prepare in terms of scheduling it with your audit firm, but in terms of the numbers, the data, and being ready for the audit, that's year round.
Great. And now we can get to our second question. is there one particular step in the auditing process that requires more attention and time than others, or are they equally important?
That's a brilliant question. That genuinely is a brilliant question. Auditors will say to you that there will be things more important than others. Okay, so from an auditor's perspective, high risk items will be your income and your receivables. Okay, however, from what I would consider to be best practice is to consider every single account that you have in your books and records to be of equal importance. Okay, every single step that we've covered here is fundamental to make sure that you are fully audit ready. Okay, obtaining, reviewing, reconciling, and ensuring. That process, all of those 4 bits are vitally important. If I was to pick one, and I think I mentioned it at the time, the reconciliation process for me would be the fundamental one. That's where you dig into the numbers to make sure that you're satisfied. So to answer the question, I would suggest that the reconciliation process is the most important one, but dedicate your time to making sure that every single number is correct. I did touch on previously that don't sweat the small stuff, and I still maintain that. I don't want you to spend hours digging into why your office expenses has increased by $40 year on year. That's not worth your time. But if your office expenses has increased by $40,000 on the last year, spend a bit of time on that. So everything's important in the audit process, but if you want one answer, reconciliation.
Great. So it appears that we have no questions left. So let's see what's next. And that will bring us to the end of our webinar, Ask an Accountant, how can I make my nonprofit audit ready? On behalf of myself and Michael, I want to thank you very much for giving us your time today. We hope you learned something new. And if by any chance you feel the need that Mbsata can help you make the world a better place, we want you to spend your time, your attention on making the world a better place. Let us handle the books. Let us handle the finances. We can make the process simpler for you. So if you want your book financial review, you can go to mbsata.com/contact-sales. If you want to speak with Michael personally on how he can help your nonprofit, please email him at michael@mbsata.com. When you leave this webinar today, you are going to be getting a survey. Please fill that out, as it will give us a lot of information and will also be very, very interesting for you to fill out as well as we continue down this process. So I want to thank you all very much again. Michael, do you have any last words to say?
Yeah, just to reiterate what Justin said, thank you all so much for your time this morning. It's very, very greatly appreciated. I hope you found this of benefit. I'd be really interested to get your feedback from that survey. So please, if you can just spare a few minutes to fill that out, that would be great. And again, if you need any help with anything, you've got any questions for me, michael@mbsata.com. I'll be more than happy to answer any questions that you have.
Thank you so much to everybody who attended, and have a great rest of the day, and continue to keep changing the world for the better. We appreciate it very much.
Thank you all.